Hey guys and girls, welcome to the London session recap for Monday the 2nd of October 2023 for Euro Dollar. So monthly time frame, we can clearly see that on a big enough time horizon, we are pretty bearish. We've pulled back up to this level, right, the supply that caused the previous break of structure, and we're starting to, get that sell-off where we can see the bearish monthly change of character. And now following our frameworks, there's a pretty high probable chance that price will be making its way down towards this low over the next year or so. So yeah, it's looking pretty bearish on that time frame. Same thing we can see on the weekly chart. All right, we pulled up to that weekly supply zone above the EQ. We had that bullish internal structure, which has now clearly shifted bearish with a clear break and candle closure below, as David covered in the weekly market breakdown. So now this becomes our strong internal high because it's done its job. It's broken the low, right? So therefore, we can now follow this bearish internal structure with the expectation that it will remain bearish until it takes out the weekly low. Okay. Now, why do we have this expectation? What is this rule based on? Well, when this high does its job, which means it broke the low, we call this a strong high, right? Which means that when price pulls back, we expect that price won't break it. So therefore, if price doesn't break it and it continues down, well, then what happens? Well, then this becomes a strong high, right? Because it broke this level. So price will pull back. We'd expect that it won't break. So that's the framework that we follow. Does that mean that price will definitely do that every time? No, of course not. If we start to come down, there's some demand within here, and then potentially we get like a bullish IBOS here, well then okay, then we can change our expectation. This now becomes our strong internal low, right? And then we can start to follow these to the upside. So just adapt to what price shows you as it goes, right? We're not saying that price is 100% going to make its way down here, so you should just sell as much euro dollar as you can, right? But anyway, we've had that. So at some point, we'll expect a little bit of internal pullback, potentially to one of these supply levels, and then we'll look for that movement there. So that internal structure, as you will probably know, is essentially our daily swing structure. So our daily swing structure is bearish. This is our swing high. This is our swing low. After the daily break of structure, of course, we can expect that potential daily pullback to kick in. However, when we have such strong momentum, we have clear bearish order flow, I'm not really going to start anticipating that this is going to happen. I'm just going to look to continue to follow this until the market shows me that it wants to shift, then I'll start thinking about a bigger pullback. Otherwise, I'm very happy to just keep following this immediate price range within here, and that's all there really is to be said about that. For some reason, the data feed looks a little bit different than what it did earlier, but this essentially is that slightly bullish candle. We're looking for price to potentially tap in and continue that bearish order flow there. Now I've jumped down to the 4-hour chart. We can see price has jumped up there. Okay, so from a daily chart perspective, that's essentially that immediate daily sort of little, internal range that we're looking for price to continue. Okay, so this is our 4-hour bearish swing range. We can see that price has pulled back up to that daily supply level. So again, quite a high probability that that daily bearish order flow could continue from this daily supply, right? So we have to bear that in mind. If we look at the 4-hour internal structure, if you map it from the previous leg, right, then technically the 4-hour chart has switched bullish. Let me just check. The high of this candle is 9.1 and the close of this candle is 9.5, right? So we closed above that high by 0.4 pips. So it's not the most convincing of breaks, but if we are 100% mechanical, there is a candle body close above that high. So if you map your internal structure from the previous leg, then technically we have had a bullish IBOS, okay? So the 4-hour internal is bullish, the 4-hour swing is bearish. So the question is are we going to get a continuation of that 4-hour bullish internal trend, whether it's to mitigate something within here, whether it's to take out these equal highs, or whether it's to mitigate this extreme supply up here, right, before we then continue that movement? Okay, that's the question. Are we going to get a continuation of that bullish internal leg a little bit higher to have a deeper swing pullback? Or is that swing pullback now complete, right? Because we've hit daily supply, we've taken the liquidity behind this high, and now are we ready to continue the overall bearish trend? We don't know, right? We have to be aware of both possibilities and then just be willing to trade those ideas in the right areas. So coming into today's London session, this is where price was. The price was already in 4-hour demand. So really, despite what your longer term outlook be, really longs are kind of the only thing really in my mind at this point, okay? Because yes, I can see that this could be the liquidity sweep, right? That's the end of the pullback. We've hit daily supply and we could be going lower, but I don't really want to play that short idea right in 4 hour demand. I would rather wait and see if price can, come into demand, maybe flip it, give us our 4 hour bearish change of character, see that 4 hour demand fail, then we've got 4 hour supply, right? And then this would be the short. Now you have a lot more confirmation, right? That's going to be a much more ideal play or area to play that short idea, right? Just waiting for a little bit more. Doesn't mean you have to wait for that, but that's personally what I'd be waiting for in this scenario. So whilst we're in 4 hour demand, if we get strong M15 confirmations, I'm then happy to look to see if we can play quick longs, right? To see if we're going to get the continuation of that 4 hour bullish internal structure to facilitate a deeper swing pullback, right? Just looking for quick movements. So keeping it simple, we're in demand. If we can get the M15 showing bullish signs, I'll look for quick longs. And that's as simple as it is. If the 4 hour demand fails, then okay, that looks like this might be the swing lower high forming, and we'll look to see if we can get those lower time frame shorts, whilst being wary of some minor demand within here that we may see some deeper moves. Or of course, this is still that strong internal low. We could get something like this where we chop around, come into here, and then we go up higher. So you have to be aware of all the different scenarios, but coming into the session, looking for longs from within here, if we get that confirmation. If we push down, we look for shorts, okay? Hopefully that's made it clear. Just be aware in the back of your minds, the bigger picture still is heavily, heavily bearish. Daily chart, right, we've hit supply and we're coming down. So, you do have to be wary of that with longs. M15 swing structure is a little bit, not weird, weird's the wrong word, but like, it's a bit frustrating kind of when you get these massive swing ranges, just because, I didn't personally view any of these significant enough as swing pullbacks, but if you did, that's fine. Then you would have had your M15 swing shifting bullish here. I left it with the more significant pullback, which means that by the time price did break it, it gives us this massive M15 swing range, which is essentially the 4 hour internal structure, right? So yes, technically now our M15 swing is bullish, right? But we have to be wary, or let me start again. The M15 swing structure is bullish. Okay, so from a 4 hour perspective, I think, this is our 4 hour high up here, right? It makes sense because we expect the M15 swing structure to switch bullish to facilitate that 4 hour pullback, right? And then we would look for the M15 swing to switch bearish to signal the end of the 4 hour pullback, and then we would look to target the low, okay? So that's what we can look to do. We can look to see, is this the end of the M15 swing pullback? And can we then look for that next leg there to the upside, whilst just being wary that we know we've hit that daily supply zone, okay? So that M15 swing structure may have only shifted bearish just to do that move. It's just something in the back of your mind, but something you have to be aware of, okay? Now, I'm going to keep it simple for you because I know if you're a bit new to the strategy or whatever, in general, it can be a lot to take in all of those different timeframes I've gone through. You might, and try and hold all of that within your mind. And to be honest, especially if you're only looking to catch, intraday, intra-session moves, you don't really need to have, an amazing read on all of that. And that's why we say in the trade plan, you can just start with the 4 hour chart as your highest time frame, right? And then you can work your way down from there. Then you'd be looking at the M15 and going, right, I now want to see, are we going to get one more 4 hour bullish internal leg? So another M15 swing leg to the upside. Okay, we're interested in that trade idea. So let's get rid of these for a minute. So if we want to see the end of that M15 swing pullback, and we want to see if we're then going to target the week high, what do we want to see? We want to see this internal structure shift bullish, right? Because this internal structure that I'm mapping is bearish to potentially facilitate that swing pullback to 4 hour demand. So if this pullback is now over, what we want to see is that bullish IBOS to confirm the end of this pullback, and then, right, it should be more high probability to look to buy these higher lows, right, would be these strong lows as protection. Now, not to make it any more confusing, but obviously we have this larger internal structure here, okay? Then we got the bullish IBOS, so if you want to keep your internal mapping from the previous leg, then you can use that as your large internal structure. And then within here, we have the small internal structure, right, which facilitates that swing pullback or that larger internal pullback, and then we go. If you want to keep it a bit more simple, and this is what I do a lot of the times, is I reset my internal structure after we have the boss, okay? So especially when we have a big range like this, you can just start mapping the internal structure here if you want, because this is what I weigh a lot more importance on the more recent price action, especially when we have big ranges like this, okay, with a lot of room to work with within it. I prefer to just put the majority of my focus on what is forming immediately in front of me. So coming into today's session, I'll just play it forward a little bit when I share my markup. This is what I could see, right? So again, the simple trade idea we're trying to do here is we've got 4 hour demand, and my prime expectation is that this may hold and we can look for one more leg to the upside. But as I said in the pre-session analysis, I want to see this immediate price action shift bullish first before I want to look to get involved because of where we are. There's no really room to work longs, and there's no high probability POI for me to want to take a long from. Why is that? Well, if we zoom in, right, and look at this internal structure, it's obviously bearish. Price has come down. Now it's hit a good, decent demand level in which we'd want to see hold if we're going to get that next leg. But what has the reaction from this demand level done so far? Well, it's just pulled back up to this supply level at the strong internal high, and price is now moving down. So what's the expectation? Well, this is a weak low. This low has failed to take out this high. We've had the pullback to that sort of extreme supply, and now price is coming down. So our very simple expectation is this low will now most likely be targeted. Okay, so I can see that there is M15 demand here, right? And it's valid because it caused a bullish choke here. There's a fractal pullback here, okay? But we just expect that bullish choke to occur, right? To facilitate that internal pullback to supply. We now have a bearish choke, and now we expect that low to go, right? That's the main framework we follow. So although I can see there's demand here, and obviously it's possible that this could hold and we could go, in this scenario personally, I find that a bit too aggressive, and I didn't want to take longs from within here. I'm happy to let that play out without me, okay? I would rather see more. So I personally wasn't bothered. Price then holds at Frankfurt Open and it starts to shoot up. Now at this point, this is when I updated the analysis in the Discord channel and basically said, sticking in line with the pre-session forecast, is that it's going to be high probability still if you wait for that bullish II boss, whatever you want to call it. Okay, wait for this immediate internal structure to first shift bullish, because then you will have a strong internal low. It's now structure is going to be in your favor. It's confirming that this demand wants to hold, right? And then we can look to get the buys here. This is going to be a lot more high probability because you have that full structural alignment. You're seeing supply fail. You have structural alignment. These longs are going to be a lot higher probability, in theory, okay? So that's why I don't want to buy from this weak low, because the expectation would be that this low would go. But market opens, demand holds, bullish change of character, right? And now we can start to see potentially the supply is starting to fail. Potentially demand is starting to hold. So seeing that, potential, beginning of shift in order flow. We don't really have true confirmation, like I keep saying, until we get that break. But this is where you may want to be a bit more aggressive and get in long before we get that. So the most aggressive way to get long would have been here. I've explained why I didn't want to buy from this weak low. But then when we have this, the market showing me it wants to hold, we're starting to see that supply fail and we're starting to move up with momentum, right? Getting a break here. This is where I was saying, this is now where you could be still aggressive, but a little less aggressive than buying this move, right? So you can look to get longs from within here. So this is where if price had to come back down and given me a clear lower time frame entry model, I definitely would have looked to take that simply because of the overall area of value on the 4 hour chart, right? I'm anticipating the next 4 hour leg. So this would be, counter internal to at least a small structure. So it's not ideal, but I would have been happy to get involved here, being a little bit more aggressive. But fortunately what happens, we don't have to kind of have that debate with yourself whether or not you want to trade from here, because now we get that confirmation. Really nice big momentum, candle closure above the high. So now the swing structure, the large internal structure, the small internal structure, everything's now aligned bullish. Supply has clearly been cleared out. So now I'm more than happy to look for longs from within here, right? If we get our entry models and look to see if we can capture that move to the upside. Okay, this now becomes our strong low because it led to the bullish IBOS. So now we can look to potentially get involved. Now price starts selling off really, really aggressively, which obviously isn't an ideal sign. Now that doesn't mean that I'm just going to go, right, I don't want to get long because we've had a V-shaped return, because sometimes they do play out, but this isn't filling me with a massive amount of confidence, but I'm happy to look for an entry if we get involved. Obviously no lid, there's one straight push, no inducement. So what do we need to see? We need to see it built to the right. So let's jump down to the M1 and see if we get that. Let's make sure the M15 zone is appearing. Come on, right, there we go, cool. So jump down to the M1 and it is appearing now, happy days. So set your alert on the POI and wait for the mitigation. So my alert goes off. Do we have any strong available liquidity? Let's see. This low broke this high. That then got liquidated, but the PBL held, so no. Did this low break anything? No, it didn't break anything in the leg, so we've come down. So we need to see something fresh built. Okay, no strong liquidity being built. Okay, so now we've had a bullish change of character. I think, let me see. Yeah, that low took that, that low was broken, right? So we have a bullish shock here. So now this can be our fake break low. So if you zoom in on this data feed, so you see how we had the bullish shock. Now this low here is 61.7, this low here is 61.7, and this low here is 61.7. So the low has not been broken since. So we would wait for this fake break low to be taken. Strong liquidity now gets taken. Okay, so then what do we need to see? We need to see the point before the liquidation fail, right? Because that's the little mechanical rule that we use to help us potentially show that institutions or whoever has used liquidity below this low in order to get long, right? We want to see demand shift back in our favor. So this is the level we would need to see go. That then holds and price then makes a clear candle body break of the low and continues down. So there was no entry model here. So I know on different data feeds on FXCM, this was a chock as well, and then that low just about got liquidated by a micro pip, and then you got the movement up. If that's the case and you're 100% mechanical, then yes, this would be a trade, right? Because that fake break low did get liquidated. But as I provided feedback in the losing trades channel, it's valid. I would say it's more aggressive. If you can barely see the liquidation by 0.1 pips, you have to use a little bit of logic and say, you know, how convincing of a liquidation is that really? So you've kind of got a few options. One, you just be 100% mechanical and you go, it was a liquidation, I'm going to take it. That's fine. Two, you can use a little bit of discretion and go, well, you know, looking at the M15, we've had a very, very sharp V-trace straight back down to the POI. It's coming towards right at the end of the session. The daily chart is, you know, very, very bearish. I don't know why this candle isn't showing properly, but let's see. Yeah, there we go. That's how it looks like. We've mitigated you know, the daily supply level. It's likely we could be targeting this week daily low now. Perhaps I want to wait for a little bit more, right? And that's using a bit of discretion in regards to if you want to see something a bit more convincing. If you want to still make it 100% mechanical, then a rule you can implement for the liquidation is that you need to see the liquidation be a minimum pip size, i.e. you might want to see price trade past that fake break low by like at least 0.3 pips, for example. Right, so I'm just giving you options here of what you want to do to potentially avoid that situation in the future. So if 0.1 pips is fine. It's a valid loss. It is what it is. If you want to see a bit more, just because of this scenario, because of the V-shape retrace and because the daily's bearish, then you're using a bit of discretion. That's also fine. If you want to keep it 100% mechanical, but you want to be a little bit less aggressive with the entry model, then you want to see the liquidation meet a minimum pip criteria, right? Just identify a problem in your trading and implement the solution that makes sense to you that you're happy to use, okay? If you use this data feed, there was no liquidation until here, and then the PBL holds, so there was no entry. The only other tiny detail I will add to this is you see here at this point, price did actually trade through this POI. I think it was by about 0.1 pips or so. So technically, another example, if you are 100% mechanical, at this point, the POI has failed the moment that price trades through it. Therefore, liquidity entry model 2 is not valid, okay? Because for that entry model, the POI must still be respected. So technically, if you know, you could say that it's not valid, but this is where I personally would use a little bit of discretion and go, you know, it's 0.1 pips. If we got like a clear, you know, big liquidation, PBL flip, big movement up, you know, I'm happy to use a bit of discretion there and get involved, okay? It's just one little thing I want to add into there. Again, if you're being 100%, you know, like 110% mechanical, technically the POI has failed. And, you know, say there's a scenario kind of like today where we've got this big bearish momentum coming down and you're not sure about this POI and you see that, then that might be enough for you to go, do you know what, I'm not interested. And maybe you want to see like that clear M15 bullish chock, fresh M15 demand, and then, you know, even look for potentially another entry there or something like that. I'm just waiting for a little bit more. But yeah, so overall, look, it is what it is. As I always say, these structural frameworks, they are frameworks, right? They're not guarantees. That price will definitely respect them. It's just our way of making the method of the madness of the market, right? The fact that we came into this 4-hour demand, if you map the large internal structure from the previous range, this is also our strong large internal low. We then had the small internal structure come in, we liquidated these equal lows, then we got the bullish II boss here. Like for me, I'm more than happy to look for longs from within here to try and capture the next move. It just didn't play out on this occasion. You know, we understand why. Everything on the high time frames is very, very bearish. We've had that pullback up to daily supply. It's very likely the next move is to take out that low, right? And it is what it is. They've just basically got caught on the wrong side of the market today. It's a bit more of a larger move that's doing that. So be it. So yeah, in terms of coming into New York, my preference, my primary forecast if I was trading it would be that price is probably going to take out this low purely because of how the daily looks and obviously the 4-hour chart as well. You know, it's looking pretty likely that that's the end of that 4-hour pullback now, and we may be targeting the low. We do now have a nice 4-hour flip where the price will pull back up into this, remains to be seen, where potentially we could look to see if we're going to get that movement. The only caveat to that, always remember, always try and look for both sides. Don't be blinded to one bias. Always ask what would the bulls be looking at. Well, we do technically have, 4-hour demand here. It's a little bit messy of exactly how you would draw it, but roughly 4-hour demand is down here. This technically did lead to a candle close break of that high. So there is some potential that this low could go and we go up higher, or at the very minimum, we may get a bit of a reaction that you may want to take a long from. But obviously this long, it's lower probability because you're trading against that essentially, right? But just something to be aware of. There may be a short-term long opportunity from within here, but this is obviously a bit lower probability because you're trading long against everything really. But just something to be aware of. We do have this M15 demand here. It's not the best because technically that's the candle that gets engulfed and that's already had a mitigation, but I wouldn't be surprised if we saw a bit of a reaction from here. But yeah, I would prefer, if I was trading, to wait for a pullback, ideally up to this 4-hour flip level. Let's see if I can get it to show. Something like this up to here, and then if we can get something on the M15, and potentially then look to see if we can get a continuation of that move. So a bit of conflicting signals from a structural perspective, because obviously this is a strong internal high on the 4-hour chart. Sorry, it's a strong 4-hour internal low because it caused a 4-hour bullish IBOS. It's a strong M15 swing low if you've mapped structure the same way I have, but the bigger picture would tell us that price is more likely now to want to take out this low, right? So this is when we don't have full structural alignment, and this is when trading can get a bit more tricky. So when it is a bit more tricky, that's where I would try and remind yourself what's the primary expectation, and the primary expectation is that that pullback is now likely over, and we're more likely than not to do that movement. So yeah, just be aware of both sides of the market, and there we go. So I hope you guys took value from that. Hope you have a good week, and I'll see you next one. Cheers.